There's your closing bell on Wall Street. Nice to see the Salvation Army there. As we ring the bell, and here are the numbers to close out this abbreviated trading week. We're going to have a Thanksgiving break tomorrow, and the Dow finishes up about just under 100 points. The S&P up 24 points, and the NASDAQ finishing in the green as well. So a positive day all around as we head into the holiday break, perhaps reacting to those Fed minutes. Let's talk about all of this and where we're headed with Rebecca Walser, president of Walser Wealth Management, and Jack Manley, global market strategist at JP Morgan Asset Management. Jack, nice to see you in studio. Very, very appreciative.
Feels good.
Thankful for that. So let's start with your reaction to what we're seeing in the markets. Didn't move a lot on those Fed minutes.
Yeah.
Did anything jump out to you from that report?
Didn't move a lot on those Fed minutes because
No.
those Fed minutes didn't really tell us a whole lot that we didn't already know. You know, we were anticipating another 50 basis point hike in December. That seems more or less locked in now. We're anticipating at least one more 25 basis point hike in the first quarter of next year. Now, where ultimately the Fed lands, when ultimately they get there, I still think there's a little bit of wiggle room there for interpretation. But I don't think anything jumped off the page right now that would suggest the market should be doing any better than they are at the moment.
And Rebecca, what do you make of this optimism that you're seeing? And are there any risks that you think the market isn't pricing in correctly right now?
Well, I note that the market jumps, we just are excited to get the fact that they might slow down the rate of the hikes, not that they're actually going to pivot, right? So we used to get really excited that we thought a pivot could be coming, and the market, of course, would have a crazy day if we talked about pivoting. This is just, we're not going to have as big of hikes, and like I agree with Jack that it's baked in now. But what I was looking at this morning was the VIX, and I noticed that the VIX almost went down in volatility by almost 4% today. And so I like to see how that's affected because it gives me a broader spectrum of, okay, how is the market overall receiving this? And again, the market is very dependent on Fed policy. This just, again, iterates that to all of us that we are really heavily reliant on what the Fed's policy is for this market. And we still need to, broaden out our spectrum and go to those sectors and those things that aren't as affected by the Fed. And that's hard to do in a recessionary period, as we all know.
And Jack, to her point, are we over-reliant on what the Fed says and does? Are we paying enough attention to the yield curve at the moment?
I mean, frankly, I think that the only thing that matters right now for investors is what the Fed does with the Fed funds rate. Everything else at this point is noise. We have been digesting so much bad news for so long that I don't think the market's learning a whole lot more about, what's going on with commodity prices, what's going on with the war in Europe, what's going on with China and its continued insistence on maintaining a zero COVID policy, right? The only thing we need to know is where exactly the Fed is going to land. So I do think it makes a whole lot of sense that we're paying attention to what the Fed has to say.
And it's going to land where? 5.525?
5.25, but my guess is as good as anybody's, right? I mean, I feel like this year has been very challenging for someone that calls himself a strategist, because I feel like at every single junction, something has happened that's changed my outlook. It's forced me to change my outlook. It's been a very, very humbling year, honestly, to be candid with you.
And Rebecca, another aspect to watch in the economy is what we're seeing from the consumer. Still seeing consumers willing to spend, even though they're changing how they're spending. But how is that informing how you're viewing earnings season?
Well, I mean, I think we obviously had a great Q3 unexpectedly so. And even if some companies did, lower their expectations, we still obviously had an overall good season. I really worry about the shopping season. It would be great if we could have a Santa rally, but I don't know that will happen this year. I look at the credit card usage and where that is, and do we have a lot more room? Because if once we go through savings, we're onto credit cards, and obviously these interest rates are going up with these Fed hikes. And so I think that, if you look at consensus, you can go anywhere from the National Retail Federation saying that we'll have the same as last year, a little bit better. But then you can look at the dire predictions. Deloitte thinks will be minus 5%, but also look at Target. I mean, Target has had an abysmal Q3 and thinks that, the holiday shopping season will be much more of the same. So we really have a wide breadth. And I think, to Jack's point, everything that we think this year that's going to be normal and we can speculate and prognosticate about it comes about that something else has changed. And we both are like, well, how does this play in? So, it's just a very difficult. It's been a very strange year all around, and we know that is obviously going to have an impact on the holiday season as well.
Strange indeed, Rebecca. We're talking about travel at an all-time high, or at least near pre-pandemic highs. Credit card debt, largest annual jump in 20 years, Jack. People are spending in the face of everything. So let's talk about the holiday sales, Q4, and the potential for a Santa Claus rally. What are your expectations?
I mean, the consumer is holding up reasonably well, I think, all things considered, and there is something to say about the the relevance of retail therapy. Honestly, you know, I mean, Americans like to spend when we don't feel particularly good about things. And you look at what confidence numbers are telling you, we don't feel particularly good about things. But I don't think that's going to really stop us from spending through the holiday season. You know, I think Rebecca made a good point there, which is that our savings rates are down. They're down considerably from where they were during COVID. They're actually below the long-term average. Credit card debt, revolving debt utilization is up. That's starting to be a bit of a problem. But at least as we make our way through this year, we're looking for something to cheer us up. And I do think that the consumer stays strong through the end of this year.
And Rebecca, another stickier part of what we're seeing in this inflation story is what we're seeing with the labor market. Even though we're seeing some jobless claims starting to tick a little bit, but we're still seeing that still sticking around though. So what does that mean in terms of the broader inflation story?
I think we're going to have to, we'll see the Fed pivot, but it won't be the pivot that we're wanting. It will be a pivot to maybe away from the average unemployment numbers to something that's more sustainable through a correction period. And I'm not talking about just, you know, a 1 quarter or 2 quarter. I'm saying that we might have to get used to the fact that we might have some changes for a short period of time as we go through all of these corrective actions, including the raises that we've seen already in interest rates and those more to come. But what we really are looking at, too, is the fact that we have a lot of people that are just leaving the labor participation numbers. They're just saying, hey, I'm tired. I'm not gonna keep looking. So that's really, you know, might be indicative of something changing underlying that we're going to have to really keep an eye on. But I think the Fed is just going to give themselves, as they've had to do with inflation, they've had to obviously, have higher tolerance for inflation, although they're trying to tap it down. They're likewise, now that we're starting to see companies freeze hiring and actually go to layoffs. A lot of the tech giants were the first. We're going to start seeing this more broad spectrum now. And I think the Fed is going to have to speak to us on the unemployment numbers that they're expecting to remain in an acceptable range before they will then change their policy again, become more restrictive even in that area.
A pivotal couple of months, let alone weeks ahead. Rebecca Walser, Jack Manley, thank you both. Jack, it has been a humbling year indeed. Happy Thanksgiving to you both.